Alright, welcome traders, it's FSB here. So today I'm going to be teaching you a very simple strategy that you can be using to scalp or make some money in the market. If you've been following me for a while now, you've been following my channel, if you're part of my mentorship program, you already understand that we'll have different phases of the market, the uptrend, ranging, and the downtrend. I'm not going to go into that because we've already spoken about that in details before. So if you don't have much idea about that, you can go back to the videos on my YouTube channel to see it. Okay, the link will be in the description. Understanding trends. Okay, that's where you see the different phases of the market. And also, for you to trade these, you also need to know about support and resistance. You need to know how to draw support and resistance effectively. Okay, I believe by this time you already know how to do that. Okay, and if you're watching this video and you don't know how to draw support and resistance, there's a video also on my YouTube channel. The link will be in the description where you can learn how to draw it. Okay, so we all know that we draw support and resistance when the market is in this phase. And what is this phase again? I'm going to give you 3 seconds to answer. 1, 2, 3. Okay, when the market is doing this, the market is set to be ranging. If you're my students, I believe you got it. Okay, so when the market is in this phase, the market is set to be ranging. Okay, so we'll draw a support and resistance, and this is when we use what? This trading strategy called the breakout trading strategy. I actually spoke about this breakout trading strategy in my ebook also. So literally everything I teach is already embedded in my trading ebooks, the beginner, the intermediate, and the expert session. Okay, so let's just go to that now. There are several trading strategies out there. Breakout strategy is one that I make use of up to today. Although it's not my main strategy, it's not my major strategy, but it is just as effective, especially when I want to scalp. So understand that this is a scalping strategy. Okay, I use it for scalping. It's not my major strategy, so I don't use to hold trade for days. No. Okay, it's just for scalping to make quick profits or make money in the market quickly. Okay, so we know that notice that we're in a range here initially. All we need to do is what? Is wait for a breakout. Okay, that is basically all we need to do. When this breakout happens, that is when we can now start what? Trading using this strategy. So there's no need to, I can't keep reading from the book. Let me just explain it for you. So all we need is a range. Okay, we need the market ranging, and we'll just wait for what? Breakout. That's why it's called the breakout trading strategy. If you have been following me, following my teachings, you understand that we also look at trends when the market is ranging. So if the market is already in an uptrend, we know that it's very likely to break above, more likely to break above and continue going upward. Okay, so these are things I'm going to tell you by the ending of this video, the rules you should look out for. So what we need first is what? Is for the market to what? To break out. Okay, for the market to break out. And when it break out, that is when we can now what? Use this trading strategy. So what we do is we would wait for that candle that broke out. These are the rules now. Okay, the candle that broke out, you have to wait for it to close. I have to make sure it closed above the resistance. Okay, in this case, the candle has to what? Close above the resistance. Are you getting me? It has to close above the resistance. So if the candle does something like this, maybe goes up, okay, but return and forms a wick and close below, we can't trade it. This is not a clear breakout to us. Okay, this might have just been a fake out. So the first rule is that what? The candle has to close above. That is the first thing you should know. So if the candle close above, then fine, we cannot what? We cannot be looking. So what we do is, once we have seen that, okay, this market probably was in an uptrend before. Okay, you can't just either way anyway, but it's more sure if the market was already in an uptrend and it breaks above, because we know by what I've been teaching you that if the market is in an uptrend and the start range is very likely to continue up, isn't it? Yes. So we capture this move. You got what I'm saying? So wait for the candle to close, and what we have to do is just capture the next candle. That is just it. We just will capture what? The next candle. The next candle will open. Okay, so just going back to my trading ebook before I come back here to explain it again. So the way we trade it is really simple. Simply wait for the market to break out, then enter after the closing of the candle that broke out. Whatever time frame you are using, enter a trade after the close of the breakout candle. Then place your stop loss below the candle that broke out and exit after the close of the next candle. I'm going to explain this when we go back to the chart. Okay, so when the candle breaks out, so we're going to see this in live chart also. Okay, when the candle breaks out, okay, we are looking to enter either at the open of the next candle, or we'll just wait for this next candle to give us away, because most times this next candle that will form after a breakout will usually try to give us a wick. Okay, so you can wait for it because it gives you better advantage. Okay, instead of entering at the open, you can wait a little to for the market to retrace, start coming down a little bit, becoming bearish first before you can now what enter. Eventually, it's going to come back and form a wick, and the market will be bullish eventually. So if you enter here, you have more advantage than someone that entered there. Okay, it's just that sometimes while waiting, you can miss the trade because there are sometimes the candle might not give you a wick. That sometimes the candle can just continue going like this. Okay, so if you are waiting for it to come down, you miss it. So it just depends on you. If you don't want to miss it, the ideal thing is to just enter a trade at the open of the candle. Okay, that's if your account can hold the drawdown that might occur here. Okay, open of the next candle. Then what you hold the trade. It's a scalping strategy. It's not something you use to. It's not something you use in your long-term trading. It's a scalping strategy. So all you do is you capture this move. Okay, this next candle, and you exit. Okay, so you can exit at the close of this candle when the candle closes. If this was a, let's say, 1 hour time frame, at the end of the hour you can exit, or you can easily exit even at the middle when you feel like okay, you have had enough profit, you have made enough profits before the candle close. Because there's sometimes also that the market could open, go up, but before the end of the minute, it can come back down and form something like a wick up and close here. So if you close there, you of course you have more profit than someone that closed there at the close of the candle. So if you're like, okay, I've actually made enough profit for this, I can just exit now. You exit. Are you getting me? So what you do is you put your stop loss at the what? The open, or you put your stop loss below the previous candle that broke out. Okay, I'm going to explain this right there. I'm going to go to the chart to explain this. Okay, so put your stop loss at the previous candle that broke out. Okay, that's if the trade was to reverse and continue going down, you are going to be out of the trade by then. Okay, but most times after a breakout, the next candle is always in the direction of the breakout. Do you understand me? So let me just show you with the trading ebook. So you can see in this example, okay, after this breakout, see the candle that broke out. After this breakout, we enter the trade. You can enter the trade here, and you put your stop loss below the candle that broke out. So let me zoom in again. Let me zoom in. Okay, so you can see it. You can see the breakout, right? You can see the breakout, the candle that broke out. You can see this candle broke out of the resistance zone. Okay, then we enter the trade here. Then put our stop loss here. Then what we have to do is catch this candle. Okay, and you can exit. If you feel like you want to continue holding the trade, that is your business. If you want to hold it, no problem. Okay, but if you want to hold it, ensure that you have gone break even first before you hold the trade for maybe the next candles or the next 4 candles if you want. That is your business. Because sometimes, most times, when the market break out like this, it just continues going up. Okay, why sometimes it's going to give you this bullish candle. Okay, then maybe the next one after it might now be a bearish candle. That is if the market wants to now come back down to if it was a false breakout. So this is what you see most times. So regardless of the time frame you use, just wait for the breakout in a range or off a trend line, then purchase the market, placing stop loss below the breakout candle and take profit after the close of the next candle formed in the direction of the breakout. Okay, so now remember, this is a scalping strategy and it's not the best if you are considering risk to reward. Why scalping usually risks more than you would get? Risk to reward is poor when you are scalping, but you are more probable to win the trade. Sometimes the breakout might be massive. You never know. So if you want to hold the trade, make sure to go break even first. Just like I told you before. If you want to hold the trade, make sure you go break even first before you hold the trade. Let me show you live examples. Okay, and I'm going to give you the rules also. Okay, now another thing you should consider, another thing you should note is that if the candle that broke out was too much, let's say the candle was too long, don't enter the trade. Okay, don't enter the trade because now your stop loss is going to be below it and your stop loss is going to be too much. Do you understand? Your stop loss is your loss is going to be too much if it goes against you. Your risk is going to be too much. That's why it's better if the candle is a little bit, let's say it was like this or like this. But if it was too much, too long from the breakout, no need to enter again. All right. So let me show you live example so you see for yourself. I'm going to tell you the other rules also involved. So let's look at this. This is support and resistance zone. Okay, and we can see. Okay, so let's know this. You can see which is the breakout candle here. This was the breakout candle. Okay, and to me, this candle is actually too long. We shouldn't trade it. Are you getting me? Although if you did it, if you traded it, you'd have got this next move good. But is too long. The breakout was too far from what the resistance. We need a situation where the breakout is something like this, where the candle is not so far from the resistance. Okay, so this candle is actually too much. So let's check out other places. So let's just check for ranges. This happen everywhere, no matter the market, no matter the time frame. It can happen in 1 minute time frame. But when you are holding it in 1 minute time frame, you know that you are just going to hold the next 1 minute candle. So if the market break out like this, okay, let's say breakout in an already established uptrend, and it breaks out above in 1 minute time frame, you're just going to hold or just the next 1 minute candle. So you can use it in any time frame you want. If it's 1 day, you're also going to hold forward just that day. Okay, you are just going to catch the next daily candle. All right, so okay, let's see this. Okay, so let's see this. So let's look at this breakout here. Okay, so you see, after the breakout, what happens? You enter or at the open of the next candle, put your stop loss below here, and you're waiting for what? Just the next impulse, the next good impulse. So the person that was holding it could have exit either at this impulsive candle here or this one. Do you understand? This is a 4-hour time frame. So at this impulsive candle here or at the closing of this one. So you see that before the market might think of reversing or reverse, you are already out of the trade. Okay, exactly. So look at this. So like I told you, regardless of the time frame you are working on, this strategy is going to work for you. So look at it. After the breakout, what happened? We capture what? The next move. Okay, put our stop loss here. The candle that broke out, then capture the next move. Then we exit the market. So before the market can even think of returning back, you're already off the trade. So one candle particularly, but you can decide to hold if you want to. So let's say after you cut this move, this particular candle, and you wanted to hold, you just simply would go break even. So you move your stop loss to your entry point. I believe you know what break even is, so that in case the market comes back, you don't have anything to lose, because there are sometimes that the market could actually start going down from here. Okay, start going down from here. That is what happened, especially if the market was if the market broke out in the direction of the trend. So if the market was an uptrend before and it started ranging and broke out, it's very likely to just continue upwards. So in that situation, you can decide to hold it, but make sure you go break even first, because it's very likely that the market could come back after giving you that next major candle. So that reminds me, I don't know when you're going to be watching this video. I don't know when exactly you're going to be watching this video, if you're going to be watching it in time. But I'm currently hosting a 10-day trading masterclass where I'm going to be teaching from the beginner to the expert section. Okay, from the beginner to the expert class in 10 days. Okay, in 10 days, you can move from a beginner to an expert via this program. It's a 3-hour daily mentorship program. I'm going to be teaching you from the beginner session to the expert session at a very low fee. Okay, now this for those that can't afford the high mentorship program, like my 3 months or 6 months or 1 year mentorship, is the best chance for you to join my mentorship program, where you'll be taught within 10 days you can get all the knowledge I have in trading. Now, the truth is that it's not like you're going to master the whole thing or learn the whole thing within 10 days, but you can get everything I know, the videos, everything you need to continue working on yourself even after the 10-day program. Let's see this. Okay, did it break below it? Yes, it broke below it. The candle closed below the support zone. You can see the candle. Okay, you can see the candle. The body closed below the support zone. So after this now, we enter a trade on the next candle. On this next candle, the open of the next candle, put our stop loss here. Then we'll wait to catch the next red candle. So after this candle here, you could have exit the trade. While, like I told you, if you wanted to hold, always make sure you go break even first before you hold, in case the market was to continue going down. Okay, so that is for this. You're going to see, like I said, this is a scalping strategy. Okay, this is a scalping strategy, and most times the risk to reward for scalping is not exactly the best. This is not my major trading strategy. This is a scalping strategy. Okay, so take a look at this. Just like what I told you before, I said if the candle that broke out was too long, okay, then there's no need entering the trade, because look at it, your stop loss would actually be what? Too much. So let's say you enter at the open of this candle now. Okay, or maybe you were lucky enough to enter maybe somewhere here. Maybe you were waiting for it to form a wick. Your loss would have been too much. Even though the market still did not hit the stop loss and it continued going up, it could have easily still come back and hit it. So if it hit it, your loss would have been, your loss between here to this point in a daily time frame, or this time frame, would have been too much. In fact, in any time frame at all. If the candlestick, okay, was too much or too long, don't enter the trade. This is one of the rules. Now, this is an example of a trend line breakout. Okay, a trend line breakout. Now, if you look at this is an example of a trend line breakout. Look at this. These ones are not breakouts. Remember, I told you if it did not close below it, it's not a breakout. So look at this breakout now. So after this breakout, what happened? Okay, what happened? We could have entered the trade at the opening of this candle, and we are looking to what? Catch this candle and leave. Why? Like I told you, if you want to, you can decide to what? Hold the trade for long. Now, this is an example of when the trade actually goes far. Like this can make you tons of money. Okay, but before you can do this, make sure you go break. That means make sure you move your stop loss that was here to what? To break even. Move your stop loss to this point. Okay, before you can decide to hold the trade, if you want to hold it. Just like I said in my ebook, you can use it in the ranging market and in the trend line. Okay, you can use it in a ranging market and in a trend line. Okay, so let's check out another. Let's see if we can get another example. Okay, so let's look at this. So this is a support. So let's start with here. Let's start with this portion. Okay, so remember our rule for drawing a support or a resistance zone. Said it needs 3 touches, right? And you can see this has been checked. 1, 2, 3. Okay, so we can call that as a resistance zone. So I'm going to just imagine there's a support zone here, just an imaginary line. Just imagine it. Okay, so look at it. What happened after the breakout? Let's look at it. So look at this candle that broke out. Okay, after the market broke out, what happened? You could have easily entered the trade here at the open of the next candle. At the open of the next candle, put your stop loss here and catch what? The next move. Okay, and catch this next major blue candle before you exit. Okay, and even if you wanted to hold, you could have still held and market would have still continued upward. And this was because gold was already in an uptrend before this range. That's what I told you. Okay, gold was already in an uptrend before the range. There's a resistance here. Okay, adjust it well. So the market broke out and closed above your resistance zone. So what do? Enter the trade at the open of this candle, this next candle, or the week. Put your stop loss here and what? And catch the move. So it's that simple. And if you wanted to hold, you could have easily what? Held and would move your stop loss here to what? To your entry price. That is break even. You can decide to hold the trade and you can ride the trend. I understand that this only happened because gold was already in an uptrend before the range. Just like I told you, if the market was already in an uptrend before the range, it's very likely to what? Break above and continue above. Okay, so in a situation where it broke below, something like broke below like this, you would really be skeptical. You would just try to just catch maybe just one candle and take your profit and leave. Okay, so see that gold have actually been in an uptrend for a long time. Okay, and you can do this in any time frame you want, any time frame at all. Be it, in fact, let's go to a 5 minutes time frame. Okay, you can do it in any time frame you want at all. I'm going to use a 5 minutes time frame now. So draw your support, and you should understand that this strategy also depends on how well you can draw your support or your resistance zone. Okay, if you don't know how to draw support and resistance where this strategy is going to be hard for you. Okay, but looking at this breakout now, this candle was too much. Okay, it was too long, so I wouldn't take the trade because my stop loss would be too much. Okay, but you can see that this working almost anytime. As you can see that after this breakout, what happened? The next candle was what? Was bearish. Okay, so go to your charts. I'm not preaching something that is just, I'm not preaching hypothesis. I'm telling you something I've done and I know it works. I've even written a book about it. Go to your chart and try it for yourself and see it. Then come back to tell me if it doesn't work. Come back to tell me that it doesn't work. Okay, so you can do this any time frame you want at all. Any time frame at all, you can do it in that. So this is it, guys. This is for today's class. Just like I said, this is not my real trading strategy. It's just a scalping strategy. Okay, this is just to scalp and make quick money and leave. If you want to know my real trading strategy, if you want to learn about my real trading strategy, get my trading ebook or join my mentorship program where I'll teach you exactly how I trade. All right, so this is for today's video, guys. Don't forget to like and subscribe so you stay updated when I drop a new video. Peace.